Hey guys, I've been racking my head around like what kind of video to make, and it's just kind of put me in a spot where I'm not really making any progress. So what I thought I'd do to just kind of break the ice is just kind of like a blog of like my progress or what I've been doing or what I think about the market. Just kind of like an update, just to kind of break the ice and get a little more used to it. So I'm gonna be probably talking about the past 3 or so weeks. So right now what I have here open right now is the SP500 Futures. It's Sunday right now, and at about 5 p.m. the futures open, and we can see like a little bit of a sneak preview on how the market might be doing this week. It kind of looks like it pretty much stayed in the same spot that it was on Friday. So all of here is Friday. First I want to talk about 3 weeks ago. So 3 weeks ago, I did like a really good week. It was looking to be like one of my biggest weeks ever. I had probably pulled in about like I think $1,600 to $1,800 in trades. Um, but what ended up happening was the week after that, I ended up making some bad moves and the market took a turn. And so I ended up losing some of those trades, or at least not max gaining on them. And one in particular, which was Netflix, ended up costing me a lot of money. So yeah, I can talk about that. Maybe I can find it in my trades here. So here's my page. This is the past 21 days. So I just did 21 days because that's about 3 weeks. I might even need to do a little bit more than that if I wanted to get like the Mondays. So maybe I just do like 25 days there. So here's 25 days of my trading, so it looks like a lot. If you're not familiar with this page, the red and the green, it doesn't mean good and bad. So the red means that I sold it, and then the green means that I bought it. Alright, so let's look at Netflix. So Netflix used to actually be one of my biggest winners. If we look at the chart for Netflix, and just look at like the past 20 days, or actually let's even just look at 180 days, right? So if we look at the 180-day chart on Netflix, so I think around, it's kind of hard to tell with Netflix, but if I pull up something like this, we could see this is where Corona and the lockdowns started happening. So we had the market kind of crash here. So that was about here February 24th. And if we look at Netflix, you can see that there wasn't that much of a crash for Netflix. It didn't really move the same way. It did fall down a lot here, but then we saw it jump up a lot to all new highs. And I think it's pretty obvious the reason for that. Basically, everybody's at home and lots of people are watching Netflix during the quarantine, so it ended up going up a lot. So I ended up playing Netflix a lot, and it was actually one of my biggest winners. Then unfortunately, it ended up being a big loss, and I can show you guys why. So I'm going to go to the 20 days. Now, if we look around here, you can see that Netflix actually fell down. Let's see, 1, 2, 3, 4, 5 days in a row. And so the trades that I usually put on can survive this sort of thing, but in this case it was a little bit too much. So the kinds of trades that I had been doing mostly, the basic concept is that I will pick a spot. So let's say, for example, let's say, we're here or something. I'll pick a number, and in this case, it would happen to be 420. So if you look at the 420 line right here, I basically place a bet or a prediction that Netflix won't fall below this number, right? And so if we look at a bigger timeline again, you can see that if we look at 420, that we had kind of not been below there for a while. So a lot of times what I try to do is I try to find like good support lines. I don't know if in this case 420 was a good support, but like you can see, for example, here where I have this alert set up, which I'll just get rid of real quick. You can see that maybe 400 is like kind of a nice support line where Netflix doesn't really want to go below 400. So that might make a nice trade to trade and try to say, well, I don't think Netflix is going to go below 400 and get some money based off of that. And the way it works is that the further away I place a line, so let's say again we're like here or something, if I place a line here, I might get like X amount of money. The closer I place it to where we are, the more money I'm going to be able to get out of that trade, but the more likely I am to lose. I try to pick lower numbers so I can just get a little bit of money, but the back or the downside of that is that if it does lose, it loses more money, right? So like if I'm up here and I place the line here, I might be trying to gain $50 and then I might only lose $50, right? But if I place it way down here at say 420, I might be gaining $50, but I might lose $500, right? And it sounds really scary, but when you start picking the right trades, just the chance of that happening are just really in your favor. And just because you could max lose $500 doesn't mean you have to just sit there and lose $500. If at any point, let's say that it starts coming down, you might see that you are now down $100 and then you're down $300 or something like that, just more and more, right? Well, at any point, if you decide that you're not really willing to sit there to the risk anymore, then you can back out. And that's basically what happened to me. I think I was doing maybe like I was going to gain $100, but I might lose $800 or $900, something like that. I usually do 1 to 10 trades, like you win 1, but you can lose times 10. So something like 1 to 900 or 100 to 900. So as this was falling down, I saw the trade, oh, now I'm down $100 and now I'm down $200, now I'm down $300. But the thing too is even if it comes down, as long as it stays above 420, even if it was at 421, I would get the max win at the expiration date, which I kind of didn't say that part, but the trades that I do, it's a certain amount of time. So I might say, oh, I think Netflix is going to be above 420 a week from now or 2 weeks from now. And the further out you go too, the easier it is to place a further line. So I'll usually just go 1 or 2 weeks out, maybe 3, depending on what kind of resistance line I'm trying to get. So in this case, I had like a week out or 2 weeks out, and I was seeing it drop. And then once it broke 420, that's where I started to get a little worried, right? It broke 420, and then it was coming back, and I was like, okay, maybe it's finally bouncing. Because a lot of times when you see these stocks drop, they kind of rebound a little bit, so you kind of hope they'll drop and then pop back up. But in this case, it didn't really. And I sat through 3 days of it getting worse and worse, and then I was like, okay, well, I'm just going to try to wait a little bit longer and see if it's going to recover. And then we ended up being on this day, and it was still going down. And I ended up deciding, well, you know what, I'm down like $500 now on this trade, and I don't really want it to become $900, so I'm just going to get rid of it. And with my luck, you can see that it actually bounced back up. And it did come back up here near 420, but it didn't really stay. You could see that it still kind of fluctuated. And I think on that Friday, which would be this day here, it still kind of didn't quite end above 420. But I could have probably gotten out of the trade at a less of a loss than 500. I could have maybe exited at like a loss of 200 or 100, but unfortunately I sold it at 500 loss. So that was the main reason that I lost a lot of that 1600 to 1800 profit that I was talking about 3 weeks ago. And after that happened, I started losing those profits of that. What ended up kind of happening on that next week was that a lot of the tech companies, which were doing strong during quarantine, were not doing as strong anymore because the economy was reopening. So we started seeing like a lot of companies that were doing bad, like restaurants and financials or all that kind of stuff, started doing really good, while all the tech started kind of just trading sideways or going down. And sideways is okay, but when it's kind of threatening to fall down, like if we look at Amazon too, you can see that it started kind of coming down. So what I ended up doing was I just got rid of all of my tech trades, because mostly I had been trading tech because they were so strong, and I know it a lot better than other stuff. So I ended up just getting rid of all of them, and some of them were like small wins and some of them were small losses, but I just got rid of all of them to kind of cleanse it all out because I wasn't really sure what was going to happen anymore. And I had like 10 to 15 different trades open, and just trying to juggle all of them and keep track of all of them was just too much. So I just cleared them all out and kind of refreshed that week, and that's why last week I only got a little bit of profit. I didn't gain that much at all. So I just kind of took a break last week. Then what I ended up doing was, I was seeing that the market overall, this is a good indicator of the market, SPY, or the S&P 500 ETF. You can see it's just been coming up, basically. And so I decided, well, the market's just recovering and it's going up a lot, and I think it's going to keep going up, and I don't want to mess out on all of these gains. So I decided to take most of my savings money that I wasn't willing to risk with option trading and just throw that into the S&P 500. Because if you have it in the bank, you get like 0.001 interest or something, and you're only getting pennies. I figured if I just throw most of it into the market, then I will be getting more money than that. And yeah, there is the possibility that the market could have started going down, but overall, this is still much cheaper to buy in now than it would have been before the virus and before lockdown. So I figured I would just buy now, and even if it went down, I could always just buy more and then just wait for it to come back up and get profits there. And when I say buy in too, I was actually buying SPY shares. So normally I'm doing options trading. I'm not actually buying any stocks or selling any stocks. I'm selling and buying contracts, and I'll probably try to do like more videos on the specifics. So if you have any questions, just ask in the comments. Also, don't forget to subscribe and like the video. So I actually bought a bunch of shares, and then I actually also ended up buying a call on it. So that's an options contract, and what that lets me do is, for a lot less money than buying shares, I can profit off the upwards movement. So I bought a call on this, and it's probably gone up like 26%, whereas all the shares that I bought, if I just go to, let's say, 10 days. So on Mondays when I bought a bunch of the shares mostly, I think if I can turn on the shares and we can see them. Yeah, so you can see I was buying them kind of like on dips. So there was a dip here. I bought like 10 shares. It dipped some more. I bought another 10 shares, and then I bought like 15 shares. And then I just waited. It dipped over here. I bought another 5 shares. So I kind of kept buying shares. And so my average is like about 300. And so all of this upside is just, I've gotten like about I think a 6% increase at this point. So that's pretty good. But again, like I said, the option contract that I bought, I don't remember where I bought it, somewhere over here too, but I bought a call, and that expires a year from now, and that's made like 26%. So like if I was, the bad part about the options contract is, since they expire, if it starts going down, that's going to be really bad for me. Whereas the shares, I can always wait it out. The options contract, if it goes down, it's going to lose money faster than if you just had shares, and it also has a time limit on it, so time's working against you there. But if I was 100% confident that the market was just going to keep going up the way it's been going up, then I'd probably, instead of just buying shares, I'd probably just put all of my money in calls and just profit off of it moving all the way back up. And so that's what I did mostly last week, and I didn't do as many options trades as I normally do. So on paper, the way I usually calculate my profits weren't as high, but this moves alone, just buying all these shares and then buying that call going up, made probably around $1,000 to $2,000. But I haven't sold them, so I haven't really realized those gains. But if you count those profits, then I made a pretty good amount of profit last week. So yeah, that's the summary of the last 3 weeks. What I'm kind of thinking this week is I'm looking to see if the market's going to keep going up. And one way to do that, since it's Sunday and the market's closed, is to look at the futures. And so if I look at the S&P 500 futures, this is going to look exactly what I was just showing you. So this is the S&P 500 futures, and then this is SPY. You'll see it's going to look exactly the same. So pretty much exactly the same thing. I'm not really sure 100% how it works, but I know enough to use them to make me money basically. But yeah, so SPY, you'll see it's kind of basically an extra zero, moving the decimal point. So you see here is 339.38. They're a little bit kind of off sometimes, but you'll see basically the same thing. So 339.75 would be if we move that decimal point. So but yeah, so you can see they're moving right now, and we can see if we go into the 1 day, 1 minute, we see that it's kind of basically see the same spot right now. While I've been doing this video, it looks like it's come down a little bit, and probably all the way overnight it's going to be moving up and down. Hopefully it stays around here, but if I'm feeling really confident about the market continuing to just recover the way it's been recovering, I'm considering just buying a call on instead of SPY, right? So if we look at SPY, I have like 2 calls on SPY now. I bought another one on Friday, so hopefully that starts making money as well. But if I buy a call on SPX instead, which is, again, I know there's like 3 of them here, SPY, SPX, and /ES, they're all the same thing. This is the SP500 future, this is the SP 500, and this is like the SP 500 ETF, something like that. But they're all basically the same thing. You'll see the number again, almost the same, 319.34, 3,193.93, almost exactly the same, just a decimal point moved over. So if I buy a call on this one instead, we have like 10 times the returns, but we can also have 10 times the losses, right? But let's just say theoretically, I'm going to show you like what an idea of what I want to do is, and I don't even know if this is going to work, but this gives you an idea, like best case scenario. So let's say that the market dips a little bit tomorrow, like just maybe in the middle of the day or something. That'd be a good time to buy it. But then I think that it's going to bounce back up and keep going up. And we're probably not going to have any resistance. You'll see here was a bounce when they first were crashing. But it's already above that. So if you look over here, it's above that. That kind of means that there's not really any resistance. You can see if you look again right here, it did bump off of it like once, but then it just gapped up above it. So all of this space here, there's no resistance. Like maybe you could argue that like here or something would be like some sort of resistance. I guess we're right there right now, but there's not really any resistance there in my opinion. So it probably won't be until like we're here back where we started. And if you look at by the way, off topic, but if we look at the NASDAQ, you'll see that the NASDAQ already blew past where it was pre-corona. And the NASDAQ is mostly like the tech companies. Right, so the only way I know to look at it is here, but these are the companies that make up the NASDAQ, and then these are the companies that make up the SP500. And some of the same companies in there, so we see like Microsoft, Apple, Google, Amazon, Nvidia. You see the same ones here, Google, Microsoft, Apple, Amazon, Netflix. Nvidia is probably in here somewhere. Yeah, so you can already see that like some major indices, like the NASDAQ, have already gone past where they were before the virus even happened. And so my thoughts is that the S&P 500 is going to be following, because all those companies that were hurting really bad, like the financials, like JP Morgan and all that stuff, they were doing really bad during Corona and the lockdown, and now they're doing really good. So it's only a matter of time before those push it up back to where we were and more. And another reason I think that it's going up so fast is because the government is printing all that money and throwing it into the market, and I think it's going to cause like some inflation. And the way the stock market usually reflects inflation is to also just go up a lot. Even if it gets here, here at February is not equal to here now that the government's printed so much extra money. It's like this is actually technically less. So I think it's going to even just blow past there and go up. And so I want to be able to profit off that, hopefully. So let me get back to my example here. So if we look at, we're here. Let's say we bought a call and we try to profit off all of this movement here, from here to here, or even more if it goes past that. One way we can do that, first of all, you can't actually buy this SPX. You can't trade it. So you have to buy SPY, right? And let's just say I bought, like, not that I have enough to do this, but let's say I bought 100 of these. We'd be looking at $32,000, right? You move the decimal point twice. So $32,000. And let's say it moved up to here, which is a huge jump, right? Normally the S&P 500 is known for going up 7 to 9% per year. And because you're basically getting at a discount here, and it's moving up so fast. And just in the past week, like I said, I've already gained 6% on it, which is almost what you'd expect to get on average per year. So this is a huge move normally under normal market conditions. But let's say I bought here, right? I bought $32,000. Even if it jumps this gigantic movement, 10, 20, So basically moving up 20 points about, we can just round it. We're going to be getting that $20 times 100, which is going to be $2,000, right? So we had to put down $32,000 to get $2,000, if I'm doing the math correct there. And that's just not super great, if you ask me. So one way we can gain even more is to buy calls. And as I was saying, let's just do it with the SPY and then we'll see the difference. So this is the option chain, and again, I'll make a video explaining this more in depth because it gets really complicated. Options are like more advanced than just buying and selling shares. But basically you're buying and selling contracts that let you buy or sell shares at a certain price, right? And so it lets you control shares with less money with a contract, but they have time limits. So these are all the time limits when they expire, and the longer contract you buy, so let's say I wanted to buy, the furthest one I can buy is 922 days from now, so like 3 years from now, then that one's going to be way more expensive. So if I just go, let me just limit these so we can see it easier. If I bought the 320 one, so this is a 320 and this side is calls and this side is puts. So let's say I bought a 320 call, this is the buy price and this is the sell price. If I bought that one, I'd have to pay $38 per share, and this controls 100 shares. So you have to multiply this by 100. So technically this is going to be $3,800 to control 100 shares, right? And if normally if I want to control 100 shares, I have to buy 100 shares. And if I bought 100 shares at 320, then I would have to pay $32,000. But instead, I can pay $3,800 to control 100 shares till December 2022. And so if I do that, now I still also gain. So when the stock price goes up, the price of this contract is going to go up, and when the stock goes down, the price of the contract is going to go down. So that's the gist of how it works. So you can see here I have a position here. This is the one I bought about a year out. So I bought over here and I bought another one on Friday, but you can see I bought this one before, and I bought the 305 call, and I think I bought that for about $2,700, and now it's worth, alright, now I can sell it for about $3,400. So you can see how that works. And I'm not selling it yet, at least not until I think the market might turn around or something like that, or once I get closer to the date. So what I'm thinking is if I want to make the most amount of money here, I can go to the SPX and I can sell an option on that instead. So say we're here at 3,193. I can go to the options chain, and because this one's basically times 10, right? We move the decimal point. These are about 10 times more expensive. So if I wanted to buy a December one, it's just really expensive, right? So this is $39,000 basically. So basically about $40,000 if you wanted to buy that contract. Definitely not doing that, but maybe if I can buy like this month out one, so I can buy here, and you can buy any of these, and the nuance of why you would buy this one versus this one versus this one is probably a topic for like another video. But basically if I buy here, right where what we call at the money, or ATM at the money, because this is at 3,193, this is the closest call to the current value. This is considered at the money, and that's going to have what we call a delta of 0.5, which basically means that every dollar that this moves up, I get $50. So if I buy this one, and then the stock goes from 3,190 to 3,195, then I would get $5 times that $5 that it went, or $50 times that $5 that it went up, so $250. And you can kind of see that reflected here. You can kind of just use this as like simple math. If we just jump up here, you'll see that it would have gone up for $200. So not exactly that, and part of that is because of what we call the bid-ask spread. You can see that the price that you buy it is here, and the price that you sell it is here. So if you were to buy this and sell this instantly, you would basically lose $90. Right? So that's why you're paying more here. You can try to get a better price if you want. When you put an order for it, you could try lowering the price and saying, well, I want to buy it for this much instead, or something like that. But in general, if you want to buy it immediately, you're going to have to pay this price. So you buy this one and then you hope that over the month it goes up and then it just keeps being worth more and more money. And so a great way to visualize this is to take this into the Analyze tab real quick. This will probably be the last thing before I cut this video because I think I'm going really long, and hopefully the next videos will be shorter, at least the blog-like videos, but since this is my first one I just have so much to talk about. So here's this contract. This shows us basically our profit. So this side here is going to be profit or loss. So you see making 1K, making 2K, 3K, or losing 1K, 2K, 3K. And down here is going to be the price of the stock. So right now we're at, if we look again, I don't know if it shows that on this page, but if we go back to the chart, we can see that we're at 3,193. And that's going to be represented right here by this little dark yellow line there. So not necessarily this dotted line, but if you see this little yellow line here, that's where the stock price is right now. And so what we see is that as this price goes up, so let's say we went from 3,193 to, let's just say 3,300 right here, which is a huge move. So not super possible that's just going to happen overnight, but just to give you an idea, easy example. So 3,300, you can see that if you look here on this purple line, we will have made, or if you look down here too, you'll see where I'm hovering there, you'll see that we could have made about $6,500, right? And this blue line represents what we will have made at expiration. So again, these have expirations. If I buy this July 17th, that's 39 days out, it expires July 17th. And so at July 17th, this $3,300 would only be worth $2,500. As the days tick by, this purple line converges, which is actually called convergence. It converges into this blue line. So you can actually kind of simulate that here. If I move the dates towards it, you'll see this purple line just slowly turn into that blue line. So when you buy these contracts, you not only want it to move up, you want it to move up fast. And that's why you want to buy as far out as you can. So like if I could, if you had more money, you can buy a year out and you're going to have a lot less of that time decay to fight because it's just going to go down. We're still at 627, but you'll see that if we go back to 627 or 67, which is today, this is just going to go down a lot slower, and I still have the other one in, but here you go. So you're going to see a lot less decay. It's going to take a lot longer to go there. But since we paid a lot more money for it, you'll see that if it is still here, a year from now or whatever the date of expiration is, you're going to have lost a lot more money. But anyway, so my kind of like daydream scenario for this week or the next coming weeks is that the market keeps going up. If I get really confident the market's going to keep going up, I might just buy one of these month out calls. And after I buy one of these, I'm just going to hope that it moves up a lot. And the more it moves up, the more profit you get. So let's say we look at the chart, right? We're looking at 33.93. Let's say it just got back to where it was before lockdown. So let's just say 3,400 to just round it. Let's say we got the 3,400. We're looking at, $13,000 profit or $12,000 at expiration. So that's insane, right? So that's what I'm hoping for. I mean, I've never made a win that big. Usually I just try to get about $500 to $1,000 a week, using some safer strategies. The problem with the safer strategies that I've been using is they're capped, right? So I said this was going to be the last thing. Here's going to be the actual last thing. Let me show you what my normal safe strategy looks like. So let's take Netflix, since I was talking about that one earlier. So normally when I do a trade like this, I take a couple days out. Let's say we look at a chart. Let's say we want to predict that it's not going to go below 400. Right, we would just go here, we'd go to 400, we'd sell this one, and then we'd buy this one. Because if you sell this alone, you need to be able to afford 400 or 100 shares at $400, which means you'd need $40,000. This is definitely a topic for another video, but just real quick. So what we do is we buy this to kind of offset that. And so I can sell this. If I buy this and sell this, it's called a vertical. You see it says it here, vertical. So I'm buying this one and I'm selling this one. And so I can, when I do that combined, I'm getting $115. Right, and so I get $115, and all I need is for Netflix to stay above 400 till next week, next Friday, right? And so let's analyze this, and you'll see what this looks like. Let's see. It's because of the date, I think, because I still have the date set to a different thing. Yep, there we go. All right, so let's say, so here's what that looks like. So if Netflix is above $400, I make, at expiration, $115. I get to keep the full amount that I sold it for. And what if Netflix jumps up to $1,000 by some weird miracle? Well, I still only make $115, right? And then the other side of that is if it goes below $400 and I quickly fall down to the max loss of negative $385, right? And like I told you, if the farther away I put that line, the more this loss goes away. And I'm skip the example for now and do it in some other video. And you can see again the convergence as this moves towards expiration, it just moves towards the blue line. And this should, technically the purple line should go away at the date of expiration, but it's just being a little silly here. Yeah, but so anyway, since the market's been recovering so fast, rather than just try to like scalp these little like $100, $200 trades, I figured I'd try to expose myself to more unlimited gains, and so that's why I'm just buying these naked calls, which are normally not the greatest idea, because if the market just trades sideways or just even just goes up too slow, you still end up losing money. But again, since it's just recovering so fast, I was just trying to give myself some exposure to that. So yeah, anyway, again, if you stuck to this whole video, pretty surprised. I've just been rambling on about this. I hope to do like more updates as I go along and update you guys on what I'm doing and answer more questions. So if you have any questions, please post that in the comments, and maybe that'll give me some good video ideas on like what I can just answer in another video all by itself. And yeah, please like the video, subscribe if you want to get notified, or I guess subscribe and then hit the notification bell if you want to get notified. But yeah, that's all for me. Thanks for watching.